this is a big problem. Yeah, I mentioned 2.5 billion people. So it's like building highways. Yeah, it's a very big endeavor. And there is a strategy, I call it all hands on deck. We need private investors, we need central banks, we need governments, we need donors, we need everyone to contribute. It's very important for everyone to contribute in a coordinated way. So that's why I'm in touch with APIS, because I think it's important to have private donors and investors, as well as NGOs, governments, because it'll take everyone to get this thing done. I know Uday quite a while from my time with InnoTribe at Swift, so he brings this financial expertise to the table, you know, on the disruptive side and the venture capital side. So it seems to me that APIS with Uday and Matteo are on a good path, good trajectory to impact. So all the best.
Financial services and financial inclusion have been one of the core areas of our investing for the past 15 years. We started out only doing financial service investing, focusing on the underbanked and the non-banked. And that continues as our work progresses in sub-Saharan Africa. We feel that it's important that the underbanked and the non-banked have access to full financial services, so not just access to credit, but savings, payment systems, and insurance. You want to be able to access your credit in the case of emergency, for basic cash flow needs when you need them, rather than having to rely on a local lender or having to travel far distance to get to the bank branch or something like that. If you can help with access to financial services, then you would hope that the family itself would benefit with providing, whether it's access to credit to start their own business or to expand their business, having access to money when they need it, for emergencies, for school fees, for everyday cash flow needs.
I'm very excited about private equity in Africa. So if you look at what they've done in developed markets, it's been a great role and added tremendous value. I think now people like this going into developing markets has huge potential to take the private equity mindset and try and deliver in Africa. So APIS Partners, a great example of what is happening on the ground, and Barclays are very excited about working with you guys.
I think I want to start with a story about actually looking at banks preparing for Y2K in the mid to late 90s. I went to Central and Eastern Europe to look at how they prepared. And what I found was that a lot of them didn't have the Y2K problem because their technology was too new to deal with it. That led me down a path of studying legacy effects and first mover disadvantages. Now when I look at Africa, particularly when I look at utility services in telecoms and financial services in general, what I see is incredible innovation because the legacy effect is weak and the power of the incumbent to stop the innovation is low. So you see necessity becoming the mother of invention, and that's a trend that's not just in Africa, although I think it's a critical trend there, but also one that you see in South Asia.
Well, I think APIS Partners is specifically well positioned because of the caliber and the experience of the promoters of the fund, specifically because of their experience as far as India is concerned and investing in India is concerned. The opportunity as far as India is concerned in financial services is very, very large. It's very substantive. When you have a growth in the financial services space, you have year-to-year percentage growth of about close to 18 to 20% for the entire industry. So there's a good opportunity there.
The opportunity in India, I think, I think it's been a volatile one. I think people, it seems to be a rags to riches again story. It's pretty. There's a lot of beta involved in it. I don't know that the reality is quite as volatile as that, but a lot of times perceptions drive whether people are willing to participate in different markets. And we've totally seen that in India. I think actually what we've seen too is with our on-the-ground capture, there's been so much volatility that the Indian consumer and the Indian middle class has had to deal with, that going back to May of last year, when sort of food inflation really took off, there were a lot of conversations we were having internally about the data we were seeing where we thought there was fraud in our data. We thought there was simply no way that prices were moving as aggressively as we were seeing on a daily basis. And then it was only some months later that you saw this kind of validated by the RBI's monetary policy adjustments at the end of August of last year.
Africa has a lot of entrepreneurial companies that have understood what is required. They have a lot of technology in place, but primarily they've come up with good business models. And business models is essentially what one invests in. Companies in Africa are not targets for private equities that are looking at investing hundreds of millions of dollars. These are companies that need smaller investments, but need the help and the expertise to grow in Africa. Take the experience from the West, take the money from the West, but then actually evolve new ideas in Africa, using Africa as a bed of innovation. And as we've seen in the past, reverse innovation of bringing then some of these ideas back into the first world.
Particularly in fintech, a lot of expertise is needed in a range of different things, from payment systems to fraud management to agent management to a bunch of different things that are common across many markets. So I think APIS kind of entry into this space, providing the capital will be necessary, one, but the expertise, two, and finally I think corporate governance. I think you do need sophisticated corporate governance in Africa, especially now. Otherwise, you have to kind of put controls and systems in place to allow these companies to grow in a sustainable manner.
So basically, whenever you look at the food chain or you look at an ecosystem around payments and payment facilitation, which then ends up with credit lending and also loyalty schemes that wrap it all together. What's happening is when people go to pay and the types of payments that they look at, all right, we can shape and mold that with the data post-mortem, okay, that comes from loyalty schemes, but also collecting this information that used to be in a physical world that's now being electronified, if that's a word. Basically, when that comes onto a platform, into a system where you can capture it, you can use that to, again, lend money and to shape the way people transact and behave. So you can generate application scores, you can generate behavior scores that facilitate lending, and basically allow risk-based pricing and allow different pricing stratas that are dependent on people's wherewithal and ability to pay and their behavior towards repayment of credit. In the emerging market, frontier market, this is a growing need because there's a need for financial inclusion, and people need access to credit to not only grow their ability to make money, but also to feel like they're part of a nation, part of a society that's prospering, and they also feel like that they have a future, that there's a vision.